Well, we got Timothy Lyons on the call. Tim, I really appreciate your time. And if you'd like to follow along or learn a little bit more, head over to citysidecap.com, where he specializes in with some syndication and a few other things. But what's really crazy here is that Tim is a firefighter. Is it in New York?
Yeah, yes, sir. New York City.
So you're a full-time fireman, or is that kind of a part-time thing now?
No, still full time. Been doing it about 16 and a half years.
But what's even crazier is that in a matter of how long has it been now, you've gone from 3 units to 721, unless this sheet I have in front of me is out of date.
Unfortunately, JD, it's out of date, right? So that's probably just north of 2,000 units as of today.
That is absolutely insane. So this has been done in a couple of years.
Just under 2 years.
Yeah. Wow. That's insane. So I gotta ask, being a firefighter, you are in a situation, it's probably a decent job, risky job, but there's got to be pension, 401k, and some benefits there. What made you decide to get into real estate investing?
Whoa. Well, yes, you are 100% right. Growing up, a lot of my, mentors and family members, I grew up right outside of New York City in a town called Mineola, which is on Long Island. And a lot of my mentors and family members always urged my brothers and I to take as many civil service exams as possible, whether it was the police, the fire department, sanitation. It doesn't matter what it was. People just always said, you can never go wrong because there's a pension, which is guaranteed for life. There's health benefits. There's major medical and dental, 401ks, whatever it might be. And in the back of my mind, I always thought they were a little bit crazy because I had aspirations to be a doctor, a lawyer. I wanted to be something, along those lines. And went to college, got good grades, and ended up just really, I wasn't able to shake wanting to be a fireman, because that's what I wanted to do since I was a little kid. In fact, when Santa Claus bought a police scanner for me when I was 8 years old, I attached it to my bike and I used to ride around town following the fire engines, wherever they may go. And I wasn't able to shake it. And especially during 9/11, having been from the New York City area, a ton of my friends, fathers or uncles or my neighbors, including my own uncle, was involved in the World Trade Center, terror attacks. So my uncle was a firefighter. He was a captain. He was crushed under Tower 2, but he was actually pulled out alive, and it was deemed one of the last people pulled out alive. He's still with us today, but he suffered, horrific injuries. But that really turned me on to, I made that decision in college. I said, I'm going to be a New York City firefighter, just watching those guys do that on 9/11. So that's what I did, and graduated college. 2 weeks later, I'm in the academy. I'm living the dream. I'm a New York City fireman. I'm having so much fun. And what I found when I got to the firehouse as a young firefighter was that a lot of guys and girls had a side job or a side hustle. Or a second career, or even small business owners. And I was blown away. I mean, there were some, really kind of wealthy firefighters out there. And, my first firehouse, when I got there was a couple of guys who were nurses, and they had the nice cars in the firehouse driveway, and their wives didn't work, and they always had steady side work. So that's what I did. I like to joke around that I was pre-med for about 15 minutes in college until I joined a fraternity. And then, became a nurse, and life was good. But I really, after 8-9 years of nursing on the side and having a couple of little kids, I felt very trapped by that W-2 grind. It started to dawn on me that, wait a minute. Yes, the pension down the road is going to be nice. Yes, the benefits are nice. I love what I do. But I felt very, very stuck. And I started to go down a path of financial education and personal growth and development, and really trying to, get clear on what it was that I was looking for and what box wasn't being checked. And, that's kind of how I found my way into real estate.
Yeah. Wow. Yeah, talking about a story there. So now you're partnering with your brother. Is that who you've partnered with here?
Yeah, so I have two older brothers, and I'm partnering with my middle brother, Greg.
Sure. How's that working out? Working and side by side with your brother like that?
Well, I think it's good that there's some distance in between us. He's down in Virginia. I'm obviously up here in New York. So no, I'm like it. It's been great. It's been awesome. Being able to start a business, not knowing, where it's going to lead us, not having the blueprint, not having the certainty that, say, a W-2 job provides, and going through that process with your brother, it's been a phenomenal journey.
Sure. Well, you mentioned before we hit record that you're going to be starting a podcast of your own. Is your brother going to be part of that, or is it just you?
Yeah, no, he sure is. It's going to be called the Passive Income Brothers Podcast, and that's actually going live this week. And it's been one of those things that we've been, talking about doing for a long time, and just never, got off the ground. But we finally got our act together, and we're super excited to launch this thing. And it's really just, we're trying to bring on people with inspiring stories, kind of like just like us, right? We're just two regular Joes, right? But we're making it happen. And so far, we've had some phenomenal people come on, and I can't wait to get started.
Yeah. So let's take a moment there, and his podcast is probably live right now. So why don't you go hit pause on this episode and go into your podcasting app and subscribe to his show quick. Let's throw some attention his way, and like and subscribe, and not only that, but leave a quick review, and so that him and his team can get a little traction on this podcast, because I'm sure there's going to be a lot of great content.
Thank you, sir. Much appreciated. Thank you.
So with that, one of the things that I find really interesting is how quickly you've went from just a handful of units to, you said over 2,000 now. I mean, that's insane in 2-year period. What kind of mindset shift did you have to go through? And how would you advise people making that mindset change in order to accomplish this Herculean task?
Oh boy. I mean, look, I grew up in a pretty modest household, right? And I really kind of think that, my money mindset was very rooted in that scarcity. What I now know is the scarcity versus abundance mindset. I think it's no shock that I chose to do 2 W-2 jobs, 2 very safe, secure, pay me every 2 weeks, trade my time for money, standard jobs. That I didn't go down the entrepreneurial, route, out of the gate, because I really didn't know, that was even available to me. That was something that some, other people did, not something that, me or my brother would do. So really I had to, kind of just go on this little personal journey and say, if other people can do it, so can I. There's absolutely no reason why I can't do it. And as I was going through that journey, listening to different podcasts and reading different books, I kept on, hearing basically the same story over and over again, with different characters attached to the stories. And they were everyday people, and they were making it happen. And I was super inspired by that. So, once I think I became defiantly committed to doing something along these lines, everything started to kind of fall into place.
Yeah. No, that makes a lot of sense. And it's kind of interesting that you say it's the same story, but with different characters. That's really the truth, isn't it? It's amazing how many people have had to go through that personal journey, as you mentioned, and make these determinations on your own. You can't convince people of anything. They almost have to discover it on their own.
No, that's 100% the truth. And it's not easy, right? Because I think when you come from a place like where I was coming from, and you needed that certainty, and you really didn't want to have that, take that risk and strike out, and then, you be beating yourself up for it. But if you don't take that risk and you don't try to strike out, then you'll never know what's on the other side of that, that action step. And I think it took a lot for me to kind of get up to that point and then cross over the line. But then, once I crossed the line, my brother Greg saw what I was doing and he got inspired. So he joined me, and then we haven't looked back, and it sounds crazy. You're probably sitting there saying, there's no way this kid has, a general partnership in $300 million of multifamily assets and north of 2,000 units in under 2 years. But I'm more than happy to jump into that, because it was, not only making that choice, it was building out that mindset. And then it was really building a team and getting educated and finding a mentor and surrounding yourself with a mastermind, of like-minded folks who were doing the thing that I wanted to do, that I wanted to model myself after. And they were all too willing to support me on that journey.
Yeah. So you mentioned finding a mentor. Once you decided you were going to go down this path, how did you find your mentor, and how did talk about that process and what it did for you?
Yeah. So, to make a long story short, after reading Rich Dad, Poor Dad, the summer of 19 on a family vacation on the beach, I decided to become a real estate investor right then and there. Had no idea how I was going to do it, but I was going to do it. 4 months later, I'm closing on a 3-family rental property. And I really wanted that experience. I wanted to be a landlord. I wanted to be the guy. And I'm not very handy, but I wanted to do the renovations. I wanted to, figure all that, out, because I wanted to be a real estate investor. What I found after maybe about 3 to 6 months, that the cash flow was coming in. We put a new roof, new siding, we renovated one of the units with help, of course, is that it wasn't moving the needle as far as I was looking for the needle to be moved. And I know it was a very short time frame, but I had a big idea about what I wanted to do. And I wanted to find a process that was going to be scalable and repeatable and rinse and repeat. And I had a limited budget, and all of a sudden I said to myself, I keep on hearing these people on podcasts talking about multifamily, but it seemed very confusing to me. It seemed like something that other people did, cap rates, net operating income, above the line, below the line, economic vacancy, physical vacancy, it was all these things. And I'm saying, what are these guys talking about, right? Underwriting and spreadsheets. And I'm like, wow, Mike, that's for private equity guys on Wall Street. That's not for guys like me. Until I just started hearing story after story. And I said, there's something to this. And the common denominator was that people had a coach, or people had a mentor, or people, worked for free for a year or two for, a successful multifamily operator. And at the time, working for free probably wasn't going to be the way I was going to do it, because I wasn't moving to, Texas or Florida or the Carolinas or Georgia. I had 3 little girls under the age of 8, so that was going to be a hard conversation with my wife to move. So it was really came down to coaching and mentorship. And when I first scratched the surface of mentorship, I had some big time limiting beliefs. I mean, I always joke that I have a healthy dose of skepticism baked into my DNA. I'm like, how am I going to pay $20,000, $30,000, $50,000 to a coach when I could take that money and go buy another 3-family, a 4-family, a 6-unit, whatever. It just didn't make sense until all of a sudden it made sense. I finally just started calling these coaches and seeing what they were all about. And then I would kind of stalk some of their students on social media and reach out to them, say, hey, can I grab a call? Hey, what's your experience like in that coaching program? What is it like? What do you, what's the return on investment kind of thing? I was probably asking all the wrong questions, but I needed some clarity. What was the process going to be like? And, I have to say that I would be nowhere near where I am today had I not joined the coaching program that I joined. I think it collapsed my timeframes by a decade or more. It introduced me to some outstanding people in this space. And, because of all that, I was able to build out Cityside Capital to what it is today.
Well, one of the things that I think you just said, I don't know if I was asking the right questions. I think you were asking the questions that nobody else is willing to ask. You asked, what was my return on investment? What That's actually what people should be considering. I know that when it comes to mentorship, some of those dollar amounts are almost overwhelming.
Staggering.
But if you take into, that's the one question that I think a lot of people miss, that you naturally went to, is you're asking these previous students, what has been your ROI? That's huge. If anybody gets anything out of this episode, I think that is probably the big key one right there.
Well, you know what? I think we've all been guilty, or maybe I shouldn't generalize like that, but I've certainly been guilty of, shiny object syndrome, right? You get an email, hey, $47, $97, $4.95, 3 easy payments of whatever. Mm-hmm. And I'm like, why don't I do that? Right. And for $97, if I never get to that course, man, I lost $100, and that is terrible because I hate losing money. But I'm not really, like, my feet weren't really held to the fire. You write a $20,000 check, or it's a $50,000 check or whatever. Believe me, you're going to be on those calls. You're going to be rifling through that material. You're going to be not only on the calls, you're going to be scheduling, tens of or hundreds of more calls, because now you're invested, dude, right? You have to make that happen, or else you just made a big, big financial mistake. And so that was kind of my mindset going into it. If I'm going to do this, I'm going to do it 110%, and I'm going to maximize my knowledge and everything. And, I have a little bit of an interesting story. When I got started with the mentorship, it was March 1st of 2020. And as we know, we were kind of watching COVID overseas, right? In Italy, they were kind of showing on the nightly news that people were hanging out of their balconies, singing songs in the streets, and they're all quarantined. And we're like, what's going on in Italy, right? What's going on in China? And 3 weeks later, it was on our shores, and we're all locked down. I work in a very poor neighborhood in Queens, in New York City, and with a lot of immigrants, and it spread like COVID spread like wildfire. And all we did was CPR for 24 hours at a time, and nobody was making it. Usually we get one person back, every once in a while. Nobody was making it. Everybody's dying. There's refrigerated trucks outside the hospitals. And I had a brand new baby at home, and my wife and I decided that I should move out of the house and move into my mother-in-law's house. And my mother-in-law moved into my house to take care of my, kids with my wife. And for 8 weeks, I had no physical contact with my kids or my family. And because we just didn't know what was going on, and at the time I was still a nurse in the ER. That was my side job, and I could have been in a really tough spot. But what I did was, because I had written that check, because I was a part of this brand new program, I rifled through the material. I mean, I became obsessed with multifamily. I became obsessed with underwriting. I started calling brokers in the middle of COVID. I mean, the country's locked down. You can't even go to the local 7-Eleven for a cup of coffee, right? Or else the cops are going to stop you. And I'm calling brokers talking about multifamily and introducing myself. I'm calling, local lenders in the Southeast, introducing myself. And I wish I had those calls recorded, because I probably sounded terrible, but I had to get the work in. I had to get the reps in, and I had to get that confidence and that clarity. And within a matter of days, I was getting brokers to email me properties. They were probably the duds of the group, but it didn't matter to me. I was getting my reps in. I was, bringing my coaches some material to work on. And, that I really credit those 8 weeks, almost 9 weeks, with really kind of giving me the jet fuel to get started. And I really kind of credit that time in my life as, the reason why we are where we are today.
I was going to ask you about this massive action that you took. You read Rich Dad Poor Dad on vacation. You immediately decided that you're going to be a real estate investor. During COVID, you're seeing a lot of these COVID infected people. You take action right away in order to protect your family. You seem to be wired to you make up your mind and you take immediate action. Is this something that has just been natural for you, or is this something that you've forced yourself to do? And if the reason I ask is because I'm sure with your masterminds and a few other places that you've been networking, it seems like there's a lot of people in analysis paralysis. They're just kind of stuck. Whereas you seem to be going the opposite direction. You make your decisions and you go.
Well, there's a lot in that. So, what I realized, and when I was, feeling stuck in the W-2, and when I say stuck, I love being a New York City firefighter. People ask me all the time, how come you haven't retired yet? You're killing it in real estate. I'm not nearly ready. I love going to work, and I retired from the hospital 2 years ago. But when I felt stuck, it was because, yes, my bills were getting paid. Yes, I was putting money into my 401k, what we call a 457. Yes, I took my family on 1 or 2 vacations a year. We were comfortable, but at the same time, there was just no feeling of like building wealth. There was no feeling of, if I stopped trading my time for money, then this show stops, so when I felt like that, and my kids are starting to get a little older, right now, now they're 10, 8, and 2, when they were little and I was, working a ton of hours, 70, 80, 90, 100-hour weeks sometimes with overtime and picking up shifts, and, they didn't say anything, and because they were too little, right? And I missed them terribly, but they didn't really notice, I guess. But then when they got to be a little older and they're crying as I'm coming home and leaving, or home, away for 3 or 4 days at a time, that wears on you, and it wears on you quickly. And what I realized was that nobody was coming to save me. Nobody was coming to, help me figure something out. And, as I started the financial education, journey through podcasting and reading books and audiobooks, there's a saying out there that, savers are losers and debtors are winners, and that you can't save your way to wealth. And, that just led me to become, really interested in macroeconomics and, taxes and real estate and, financial management tools. And, it just became almost like an obsession. And because of that, I was never a morning person, yet now I'm up at 4:35 in the morning, getting a couple of hours of work in before the kids wake up. If you would have told me a couple of years ago this would have happened, I would have thought you were crazy, but it was, having that pain point of no one's coming to save me, savers are losers, debtors are winners. I have to figure out how to make that happen for me. How do I use good debt? How do I get into real estate? How do I get cash flow? The difference between cash flow and appreciation, and having maybe both at the same time, like, saving more on your taxes, keeping more of what you earn. Like, everything was kind of coming together for me at one time, and it was really exciting. So I was moving away from a pain point. I was moving towards something that was really exciting. And then, as real estate and commercial real estate, especially, is a team sport, and that's probably the next chapter of maybe even this talk is I had to find my spot on the team. I had to find out, where am I sitting on the bench, because you can't do it by yourself. And that was another growing point, a point of growth, I should say, in my journey, was that I wanted to do everything by myself. I'm just kind of built like that, I guess. And when I got around these people who were doing the thing that I wanted to do, and my mentors and my coaches, it's very clear that you need to build out a great team to be successful.
Right. Well, multifamily has, and I've mentioned this time and time again, when we get into real estate investing, it seems like multifamily is aspirational. It's something that it's like we're playing a real world version of Monopoly. Everybody starts to collect the single family homes, and then they move to the duplexes and triplexes, and then we can trade up to the multifamily eventually. But you jumped in like almost immediately, but with your experience with the triplex and a few other deals before this, how has that transition been? And would you suggest people just jump into multifamily right away? And is it possible? Is this just another mindset thing?
Yeah, I think it's everyone's journey is going to be a little different, and it's all about what you kind of want, and what you're good at, and what kind of value you could bring to a team, and where you are geographically. Are you in a high growth MSA that people want to invest in, or are you like me in the Northeast and people don't generally want to invest in non-landlord friendly states? What I would say is that it's easier for me to say now, having been on the, 1 to 4 unit space, and then, kind of graduating, if you will, to the multifamily space, that if I had it to do all over again, I would start in the multifamily space. Because if you can do a 2 or a 4 unit, you can do a 20 or a 40 unit or 100 units. It's really kind of it's the same game on a bigger scale. And if you can figure out what the rules of the game are from 1 to 4 units, you can certainly figure out what the rules of the game are for 5 and above.
Sure. So when you were talking about, let's go back to the masterminds. Are you a part of a lot of masterminds, and what are the benefits have you found there?
So I'm a part of, I would say 3 mastermind type groups. When, again, if you told me 2.5 years ago before I started this that I'd be doing that, I would have told you that you were probably crazy. But here I am. And, it's no secret that once I started joining these groups and aligning myself with these people, that I started getting opportunities to invest in multifamily and to join, other partnerships and, really learn in an organic fashion how to do this business. How do you get a property under contract? How do you underwrite it? What is the due diligence process like? How do you work with a preferred equity group? All these things kind of came rapid fire because I was a part of these groups. And then just networking. It sounds so cliched, your network is your net worth, but it's honestly, it's the truth, being around people that are like-minded and who are trying to make it happen, and having those organic relationships. I just got back from a conference in October from Orlando, which I spoke in front of 800 people. That was a phenomenal conference. It was the first conference I've ever gone to for real estate. And I knew so many people there from the Zoom calls, right? And people from all over the world came into this conference. And I'm able to shake hands and give hugs and, go to dinner. And, it's so satisfying being a part of like a mastermind and being supported by these people and in turn supporting others. And then, through that process, that's when these deals get done. And that's how you just grow your unit count and grow your assets, and really kind of work towards your goals, but, in a large part together.
Right. No, that's great to hear. It's amazing. And I was in the exact same boat. The concept, some of this, I thought a lot of this stuff was just a bunch of hokum. This whole mindset thing was just crazy talk. How could that think and grow rich type mentality just didn't make any sense to me. And now I'm all in. There is a lot of power there. Especially when you have the opportunity to surround yourself with like-minded individuals. It really is a boost.
It's powerful. Like, so for example, how much I love the fire department, and we always talk about the firehouse in a very fond manner. But, around the firehouse kitchen table, you might hear guys talk about the pension system or, how to work, more overtime so that your pension can, grow, or, if you stay an extra 5 years, you can get X amount more in your pension. And like, that's really the conversation that's going on, although it is changing, I must say, with some of the, the millennials that have kind of come onto the job, and they just have a different mindset altogether and are more technology based and willing to take those risks, where, the old timers are built, a little differently, very kind of old school. But, there's really not a lot of talk about tax strategy or, LLCs or, bonus depreciation or, underwriting, at that table. And I'm not taking anything away from those guys. They're the best and I love them. But when you kind of grow into a different group and you surround yourself with that, people who are talking about those things, and here's how I did it, and here's how my business is set up, and here's how I got my start, and you start to learn from these people. It's incredible the growth that can occur, and that's really where my success has come from.
No, that's just so good to hear, and I can't reiterate that enough. the being around like-minded individuals and being part of these type of groups is I really struggle with the fact that a lot of people just frankly don't see this type of thing, because a lot of the better mastermind networks are going to charge you money again. And getting a mentor, some of those mentors are going to charge you money. But to take a moment and realize that this is an investment as much as buying a multifamily home, there's a return on investment that needs to be calculated. And you'd be surprised. It's probably, I'm sure you could put some KPIs around this, but it's probably going to be the biggest return on that capital than anything else that you can invest in.
Without question. People ask me all the time, if I lost everything, today, what would be the first thing I would start doing tomorrow? And I kind of answer that question with, I would find, money, and I would go join one of these groups again, just to get myself back in the door. I wouldn't buy an asset first or anything. I would get myself back into the group, because that's where the magic happens.
Sure. So, earlier you talked about when you first started real estate investing, you wanted to pretty much do and experience everything. So whether it was doing the rehabs, you're not a handyman, but you were going to do it anyway, and a few other things. Now that you're going into the multifamily, you've already talked about building a team. What was it like to start letting some of those reins go and trusting your team?
Well, what you find out very quickly is you have to ask who and not how, right? There's so many people out there with expertise above and beyond what you're capable of doing. And when you put the right, players in the right spot at the right price, you can get so much more done in a smaller amount of time, which can lead to, outsized returns, right? So, once I learned that formula, it made so much more sense. And, to be quite honest, I'm so happy that I had the, landlord experience. I actually just sold that property at the 24-month mark. Decided to test the market. It wasn't in the cash flow. It wasn't in a appreciation market. It was in a cash flow market. And I tested the water, and I was able to get an insane price for the house. So I sold it. So that was a great lesson. That was a great educational experience. But being a landlord can be very tough. It was a 2-hour round trip. By the time I got there, did what I had to do, went to the store, went back to the house, did whatever, back home, battling traffic, whatever. It wasn't that far away, but it seemed like it was a hassle, right? Big snowstorm coming, making sure, originally I was doing the shoveling, but then I got smart, right? And I started paying somebody to do it. It was all that stuff that I needed to learn. I needed to learn all that stuff. I wanted to do that stuff. I wanted to know what it felt like. But now with the multifamily, with professional property management in place, the professionals who know how to do all the things that the property needs to run efficiently and effectively and to maximize your net operating income, that's who I trust, right? So now that's now the new teammate is the property managers and the asset managers. So that's the beauty of multifamily. And when I got started in this, 2 short years ago, I didn't even really know what syndication meant. I didn't know what passive investing meant really and how it worked. Because to be totally honest and transparent, it almost sounded too good to be true, right? How could you possibly just, write a check to somebody and then buy yourself some cash flow and, and then all of a sudden it appreciates or refis. And, it just sounded like, almost like pie in the sky to me. Mm-hmm. But then being on the other side and, my first deal was a 43 unit with my coach, and that was a syndication. It opened up my eyes to the power of, using investors, and providing them with a deal and providing them with a solid return on their investment. And how powerful, grouping, investors together to buy these properties was. And that's really where I took off. The first deal turned into deals 2 and 3. And before you knew it, I had over 300 units in like a few months. And Greg and I had, really come to a crossroads and say, like, what is our strong point? What's our superpower? Where are we going to add value to the team? And because of where we are in New York, and our networks, and Greg played college basketball, and now he lives down in Virginia. He has a whole different network down there. He's lived all across the country. Raising capital came kind of natural to us. We kind of fell in love with the process of raising capital, with investor relations, with really kind of networking with people. And, but we wanted to do it in a legal, squared away way. So Greg and I decided to take our Series 82 and our Series 63 exams, and we aligned ourselves with a broker dealer that's is specifically focused on multifamily and self-storage, syndications. And, that was it was almost like it was too good to be true for us. Like, that's exactly what we were looking for. And because of that, that's, precisely the reason we've been able to scale up so quickly, is because, we're part of the team, and we take care of the the investor relations and the capital raise on the equity side. And that's how we've been able to grow.
Yeah, that's another exercise that I think a lot of people should do, is what you just suggested there, is taking an assessment of your own skill set, what you're actually good at, and focus on that, and find those pieces to kind of fill in the puzzle.
Yeah, absolutely. I mean, we were not going to be the boots on the ground. We weren't going to be the asset managers having no experience. And we weren't going to be the underwriters. We weren't going to be underwriting $20 million deals out of the gate. Although we could, I'm not sure how great that underwriting would have been. But you know what? We just, and again, Greg might have moved to a different, location, but I really don't have the luxury of doing that. So it really kind of fit our needs to do the capital side of the equation. And it wasn't easy taking those exams and studying and everything, but it was so worth it because it fit into our model, now, because I think you said it before, there's a lot of analysis paralysis out there, right? When you have to do something by yourself, it could be overwhelming, and you can say, you know what, that was a really good idea, but I'm just too scared. I don't know what I don't know. So therefore, a confused mind is going to say no. And I'm going to take my ball and go home and say, I'm going to go back to the stock market like everybody else, so no one can tell me at a party that what I'm doing is risky. And so I think what we've kind of done at Cityside Capital is to kind of take all that feeling, like I just talked about, and try to just erase it for the investor, by doing the due diligence on the operator, by vetting the operators, vetting the deals as they come through, using third-party legal and due diligence firms to, vet some of these processes. And, by the time we deliver an email to the investor saying, hey, we have a deal, they know now that, this has gone through, several due diligence cycles before it ever hit their inbox. And I think on some level, when you do a group investment like that with other people, and you have somebody like Greg and I to call, like, it just makes people feel better, right? Like, you took the hard work off our plate. We know we should be in real estate, but our financial advisor only recommended a real estate investment trust, because that's what they get compensated on. They never said anything about a private placement. They never said anything about getting our own single family or duplex, triplex, because that's too risky. So it's really an exciting time to kind of be sitting in our seats.
Yeah. No, that's really interesting. So again, citysidecap.com. Make sure to check out their new podcast. It should be available now. And, it looks like we're probably kind of coming to the end of our time together here, but this was a great conversation. I'd love to have you back on again, because I'd love to understand like some of your due diligence and even to the point of how you're picking your property managers and a few other things. That could be a show in itself. But again, citysidecap.com. But before I let you go, is there a question you wished I would have asked you here today?
Oh man,
I got to put you on the spot.
That's a really hard question. That's like the hardest question. I thought you were going to ask me my favorite book or something. No, I mean, look,
well, we can change it up on you if you want. What's your
No,
favorite?
I can talk about real estate all day long. And that's the beauty of it. Like, because once you understand it and once you know the rules of the game, it's very easy to talk about. It's very easy to, have these conversations. So, I just want to thank you for your time. And obviously the favorite book was, just like everybody else, The Rich Dad, Poor Dad. But that's really the idea book. The tactic and the how to implement book is called The Cash Flow Quadrant, and that's his next book after that, Robert Kiyosaki. So those are my two favorite. But no, thanks for having me on. It's been a great conversation. I'd love to come back and chat about whatever you want to get into next.
Yeah, I appreciate it. And you're welcome back anytime. So again, it is citysidecap.com. Thanks again. This was great.
Awesome. Thank you.